Okay, I think we are live. Hello, everyone. Hopefully we're live. I am crossing my fingers. Tonight, I have a really extra special session for you all. And the reason for this is that we unfortunately had a scheduling, a change in our schedule, really. Dr. Param Baladandapani, who's supposed to be with us tonight, unfortunately, she's a little bit under the weather. So I will be holding down the fort with you tonight. And I'm excited about it. I'm excited about it because it's going to give me an opportunity to answer some questions that I have been getting in the DMs and throughout. So I want this to be as interactive as possible. I don't have anything scripted to share with you tonight. So it's going to be open season. Come in, let me know any questions that you may have regarding market analysis, market optimization or property optimization for the markets that you're currently investing in, because I know that a few of you are encountering, some changes, right? Changes, whether it's occupancy changes, and I've got two monitors because I want to make sure that I'm watching for questions, but occupancy changes, any issues related to that, my friends, I am here for you. So jump in, let's see. Jump into the chat. Let me know that you're here. Let me know that you can see me. Let me know that you can hear me, because I am ready to engage with each and every one of you. Okay, so the first alert that I'm getting for those of you who are joining via Facebook, Facebook is saying to leverage this link to make sure that I can see your name. So chat.restreet.io/FB if you're on Facebook. Okay, Christian, I see you. Hello. Christian is in YouTube, which is awesome. So Christian, let me know if you can see me in all the other places as well. That would be amazing. And I'm looking for my chat. So things look a little bit different today. Okay, I think we're good. I think I see the chat, which is awesome. Okay, David McKnight says, hello. Hi, David. It is such a pleasure to meet you. I don't think we have yet met, so it is so good to meet you. And I'm looking in here. Okay, it's saying some of these places are considered read-only, which is fine, but I'm anticipating that they might be live. So I may not be able to respond on those platforms. Okay, but I think we're good. I think we're good to go. So yeah. So guys, for those of you who are just joining, we have an unscripted Ask Me Anything, and we're talking about market analysis. We're talking about data. And so I did receive a few requests to take a look at some markets, okay? So when we're looking at markets and we're trying to identify whether or not our property is performing with our market, or our property is underperforming, or our property is top tier, there are some really great tools that I love to use, one of which is, of course, AirDNA. And I do want to share my screen to show you all how I do it. Yeah, who here would like a bit of a demo? Okay, awesome. I'm getting some affirmation here. All right, so let's just jump right in. So for those of you who have yet to meet me, my name is Rachel. I'm a short-term rental operator. I operate primarily in the short-term rental luxury space, as well as the midterm rental luxury space, where I help displace homeowners by providing them housing during a very critical time in their lives. Oftentimes, they have encountered a disaster of sorts, whether it's a fire or a flood. We're able to leverage our properties in markets where we're in the suburban area and leverage those midterm rental properties. And that is a midterm rental strategy that I use. So contrary to popular belief, midterm rentals are not just your travel nurses, my friends, right? Midterm rentals can be a wide variety of other verticals as well. Okay. All right. So without further ado, we're actually looking in the Cape Coral area a little bit earlier. And so I got a question about Galveston, Texas. And so for those of you who are not all that familiar with AirDNA, AirDNA is my go-to when it comes to analyzing markets that I actually want to invest in. But the hidden gem, the secret, my friends, is not only can you analyze markets that you want to invest in, you can actually monitor your properties, monitor their behavior, monitor how they're trending or tracking compared to other properties, and thereby troubleshooting as well, right? So I use it not only for investing, but I use it for troubleshooting and resuscitating some life into my property as well. So one of the ways that I do that is by looking prospectively, and the prospective panel starts down here with price, okay? So I'm gonna kind of, I'm going to reduce these two tabs here, and the retrospective panel is up here. Overview under research. Research means the past, right? It's already happened. We're just researching to see what's happened in the past so that we can kind of future pace, see what's going to happen in the future. But so that's our retrospective review. Prospective review is like, what's happening tomorrow? Like, why am I not booked tomorrow, right? Why am I not booked on Friday? Why do I have no bookings, for the next several weeks? And this is definitely where I'm able to leverage this tool, as well as inside of the, I'll show you. Inside of the market comparison is another place that I leverage it as well, okay? So let me give you just a quick lay of the land. And so we have access to the global AirDNA, which is very important to me because although a lot of individuals in the community are no longer investing, so they're sellers, they're not investing right now, there's a lot of fear out there, and I totally get it, but we're able to leverage lower than asking price on properties. We're making offers. We actually saw a short sale property today, and it's just a different environment, right? Of course, evaluating the market, knowing your numbers, identify whether there's demand versus saturation, right? Because the big host is saturation, but is it saturation or is it demand? And I think that's something that's very important. And it's something that I do want to call out because I think it's so important, right? And so I'm not nervous about a little bit of saturation. What it indicates to me, as long as my numbers pencil out, I know I'm going to perform in the top 5% of my market, I'm not really nervous about saturation, guys. You're going to be more attentive than those guests who are not on this call tonight, right? You're on this call for a reason. And so being aware of the tools that are at your fingertips puts you ahead of the game, puts you in that blue ocean where everyone else, is in the red ocean. They're kind of following where others are telling them to invest, just kind of haphazardly, but you really need to understand what's going on with the data. And part of that is, just using what's available to you and triaging, right? And filtering and cleaning it up so that you can use data that is going to be applicable for your specific asset. Okay. So just as a high level, and give me, I don't know if I can see all the comments, but let me know in the chat who here has used AirDNA before. Put a 1 in the chat. And if you have not, put a 2 in the chat. And Christian, if you could let me know, I'll look on Messenger. Let me know what the responses are, because I don't want to just, tell them like they're 5 if they've already got tons and tons of experience. And I want to dive into more complex ways that we leverage AirDNA, but just depending on who's here and what your level of expertise is, because I'm not here for me. I'm here for you, my friends. I am here for you. Okay, so let's see. Oh, hi, Sujati. I don't think we've met. Hello. Okay, so Sujati is asking about the agency. So Sujata, I'm so sorry. So for the temporary housing agencies, we leverage a number of agencies, both local to us as well as national. Okay, so there are temporary housing agencies that are local, like within your immediate area, and it just depends. I know mine that are in the greater Atlanta area, but then national, we leverage ALE Solutions as our #1 temporary housing agency. And that is an agency that houses, individuals who are displaced from their home due to a disaster. They work with a lot of the major insurers, such as Allstate, State Farm, Travelers. They just work with a lot of them. And so, yeah, we've really had, oh, no, it's asking me to add someone to the block list. We've really been blessed with working with them because not only are we collecting a really nice, amount of revenue per month, but we're able to help someone in the community who's in need. And they stay with us for a considerable amount of time. Anywhere from 4 months has been our shortest to, 12 months has been our longest stay so far. Okay, so they approach us typically with a 1 month lease, but we know, just depending on the type of damage, what that's going to look like. So 1 month lease is not typical unless they're at the tail end of that stay. Okay, so I see some 1s and some 2s. Okay, so not everyone has used AirDNA. All right, so guys, let me do I'm going to do a quick high-level overview to make sure that everyone's caught up, and then I'm going to get into the more complex arena if that is okay. Okay, so first and foremost, my friends, I am on the research tab. So on the research tab, you're going to identify the market grade, which is B+. That is fine. I don't go all in onto the market grade, honestly, because it just gives me an overview of the whole market. Now, if I saw a really poor grade, like a D or something like that, I would be concerned. That means the whole market is tanking. But the fact that the market is a B+ means the entire market, for instance, those that are, the 8-bedroom mansion that is oceanfront, that's going to be factored in with the trailer, right? That is dilapidated and out in the woods somewhere. So it averages all of that together. It doesn't tell me a lot, but again, if this grade was low, I would have a greater amount of concern. I'm looking at market demand. I just kind of a high cursory overview, the growth, seasonality. This one is actually pretty important to me. If it's down to like less than 10, I'm really not interested, to be honest with you. Regulation is important as well. Investability is not important at all to me. I'm just letting you know, overview what I am looking at. Then I look at the occupancy rate is really what I look at, but I'm not going to skip over anything at all. This gives you the average daily rate for the last 12 months or so. That doesn't mean anything to me, really. This revenue also does not mean much to me either, because remember, we're averaging everything for the entire market, right? But let me tell you what's meaningful to me. Occupancy rate is so meaningful to me because if it is below 50%, I do get concerned that, well, you know what? This is a market that doesn't have a lot of, a lot of interest, right? So if it's under 50%, I'm not confident that we have enough travelers in the market that, we are going to, we don't have enough travelers that we're going to really see a difference. Okay. So for those of you who have invested in areas where the occupancy rate is less than 50%, it's going to be difficult. It's going to be difficult to reach your target. It's going to be difficult to cash flow. Okay. Because you don't have enough traffic coming into the area to make sure that your properties are being booked and to make sure that they're being booked at a premium rate. So this is the number that is the most important to me. The higher, the better, but less than 50%, it's going to be very, very challenging. Okay. Unless you're a pro operator, unless you have some intel that the market is going to be building out, a major industry, I would highly recommend that you, you consider those markets that do not have the occupancy rate of greater than 50% to be more of a high risk market. Okay. All right. So this is just the first page. We're just going to go through this. Once I'm done with the first page, I'm going to do a quick analysis, and then I'm going to pause for questions. Okay. So feel free to drop all the questions. I know Christian will be collecting them for me, but feel free to drop all the questions. I will go through them one by one. No question will go unanswered. Okay. All right. So the second thing I'm looking at is this is a market that seems to favor Vrbo. You guys notice that? So Vrbo is outperforming Airbnb as it relates to the channel that is the most booked by the host. And so I love a market where Vrbo is outpacing Airbnb, because Vrbo is the OG, right? Vrbo is the original. And so because it's outpacing Airbnb, it tells me that we have a lot of older operators in this particular market. They're not optimized, right? And since they're not optimized, it gives you an opportunity to come into the market and really make a difference, because not only are you going to be listing on Airbnb, you're going to list on Vrbo, you're going to really go all in. We have quite a few of the traditional, hosts, again, the OGs, who just they won't book on Airbnb at all. They're like, just say no to Airbnb, right? So knowing that Airbnb is the Google of short-term rentals, is really important, because what happens is they really, are going to get the most market share than Vrbo for the most part. Okay. So whenever someone's looking to book, most people are looking on Airbnb. You still have some of the legacy individuals, I don't call them older, but legacy individuals, the traditional individuals, who will continue to book on Vrbo. But for the vast majority of travelers are looking on Airbnb. So very important to make sure you're optimized by booking on Airbnb. Okay. All right. So the next thing that I want to look at is the rental growth. So I just kind of give it a cursory look at the rental growth. The next thing I'm identifying in this particular market is, oh, look, there are some property managers. So not all markets have property managers. So the fact that Vacasa has come into this market, Roland's Vacations has almost 300 listings in this market. Evolve is in this market as well. And we have a couple of other ones that I'm not familiar with. I'm not familiar with this market at all. This is something that I was evaluating with another client a little bit earlier. But, the fact that you have all of these property managers in the market, it indicates, that could be a little clue that there is activity in this market. And additionally, the fact that these ratings, and no offense if any of you are employees of these companies, but these ratings, they kind of suck. Could I just is it okay that I'm candid with y'all? They kind of suck. Just saying, right? They're not the best reviews. And it could take a number of things to get it, to dip below 4.8, which is like the gold standard to keep your superhost status. But, just a few bad reviews will get you there quickly. All right, so amenities, we have aircon, we have heater, washer, dryer, and so on and so forth. And as far as the Airbnb ratings, so you get to see what the average reviews are for the different core metrics. And it appears that cleanliness and value are the two that get dinged a little bit compared to the other reviews. Rental activity, I kind of give it a cursory look. Rental settings, I come in here as part of my troubleshooting routine as well. So that's really what I'm looking at on this first page of AirDNA. I just want to get a high level overview of what this market has done in the past. We're looking in the past with AirDNA, we have information that is from 2018 and on. So quite a few years of information. So this is, I feel it's pretty highly leveraged. And so it's going to be really important to, have a look at this type of information. Now, the average length of stay. So I'm going to start over here. And this is, again, we're in research. So as long as you're in the research tab, and I'm spilling the tea, as long as you're in the research tab, you are looking retrospectively. As soon as we get into price, we're looking prospectively, okay? All right, so let's do a little bit of research, my friends. The average length of stay for this market is 6 days, okay, which is very important. So that means that you have guests who are staying, 12 days and beyond. You have guests that are staying 2 nights, so the average is 6 days. I actually use some of this data to leverage some of my midterm rental strategy as well, especially markets that I'm not familiar with, okay? The booking lead time is oh so very important. I'm going to show you how I put that into action in the prospective research as well. So the booking lead time is oh so very important. It means that by the time I book, if I were to book today, I will arrive to the property about 90 days from today. So April, May, June, July, about July, 16th, which would be around 87 days. So people are booking 87 days or so out. So for those of you who are, putting the pieces together, I want you to start to think to yourself, okay, if I'm not booked, next week and I'm in this market, well, do I panic? Do I start dropping my price? Like there's no tomorrow. No, we're not going to do any of that. We're not panicking because the booking lead time is pretty far out. And so we would not need to be panicking in that particular situation. Okay. And booking lead time changes from month to month to month. And for instance, if I were to look at all of April's booking lead time, that's going to be different from May's booking lead time, from, June, from July, from August. So this is just our average booking lead time. Okay. And again, we're looking at the occupancy rate. It's over 80%, which is absolutely awesome. Okay. All right. So the next thing we want to look at, for those of you who oftentimes I hear say, you know what? Is my market saturated? Okay. How many of you, let me know in the chat, put a 1 in the chat. How many of you wonder about that as it relates to certain markets? Is my market saturated? Because I hear everything. Let me know. Put a 1 in the chat if you wonder that sometimes. Okay, great. So okay, awesome. I'm seeing a lot of yeses and 1s. Okay, fantastic. All right, so that is a very valid and it's a very important question. But what I want to debunk for you, I really want to debunk the fact that just because there's a lot of listings in a market does not mean the market is saturated per se. So let's go back to the overview, for instance. So we see, I forgot to mention this part, we see that there are 3,769 listings here on AirDNA listed for Airbnb and Vrbo. And that's quite a few, right? So when it comes to market size, and that's where you're going to see AirDNA prices may vary, because when it comes to market size, there's small, medium, and large. Okay. The small markets are markets that have less than 100 listings. So if you go in here, there's less than 100 listings. There are pros and cons to that. So be very wary of it, right? If there are less than 100 listings, guess what? You're going to not have as much competition. You can probably throw that property together. Whoever is going to be in that market is just going to take what they can get, so it's not going to be much of a challenge in order to get that property booked, to stay booked, if it is a market that has the right occupancy rate, right? However, the issue that I find with these markets that are less than 100 is sometimes these markets do not have enough of a labor force to support the hospitality side of the house. So finding cleaners, finding maintenance men, finding, individuals to help you out that understand what it is you're trying to do, that can be a bit of a challenge. Okay. So be mindful of that. You are going to get some good deals with, investing in small markets, again, markets that are less than 100. Medium markets are 100 to 1,000. Okay, let me say that again. Medium markets are 100 to 1,000. And large markets are greater than 1,000. Okay, so large markets are greater than 1,000. So one of the largest markets, if not the largest market, my friend, is Kissimmee. And I don't know that I can spell it correctly. Kissimmee. Okay, so Kissimmee has 28,000 listings, so large market. Large market, am I right? So greater than 1,000 means it is a large market. So keep that in mind, okay? All right, so let's go back to occupancy. What I love about occupancy is this is where I am able to start to identify, well, is there saturation? And saturation is a term that is determined really from an economic and scientific perspective, really. So demand is when there is more, not enough supply, right? Not enough supply, it increases demand. So people want these nights, they want these bookings, but there's not enough. So that would be demand. But say you have saturation, it means that we have a lot of properties that have entered into the market space, but the demand isn't there to meet it. And so a lot of times the number one indication that the demand isn't there is we have hosts who are willing to just continue to drop the prices lower and lower and lower. And when that happens, unfortunately, it's almost like the race to the bottom. Okay, it's the race to the bottom. So we do not want booking demand to just kind of tank. And so saturation can be the fact that you have a lot more properties and you don't have a lot more dollars being injected into the market. Okay, so I don't mind if I have a lot more properties plus a whole lot more dollars. I want all of it. Okay, I want all the properties, I want all the dollars. I am okay with a market that is slightly saturated, but I'm not okay with like an oversaturation. Okay, all right, so let's take a look at that. For instance, from a high level overview, if I am looking at, for instance, let's see, you have, hang on one second, active listings. Okay, so you can see that in March of 2023 compared to March of 2022, you see the difference, right? So it's almost like a double in this. So from 30 down here, we had 30, and then now we have about 50. Okay, and so what I love about this new downloadable that, hang on, let's remove the filters. View all, both. I'm going to reset all. Reset. Let's do that. Okay. Oh, so I'm no longer in Cape Coral. I'm in Kissimmee now. Okay. That's fine. Either way, it works well. Okay. So boom. All right. That was strange. You guys, did you see that? That was really strange. Okay. So this is different, guys. This is really different. Most markets, and I expected this, honestly, most markets you see an upward trend, an upward trajectory, but in the Kissimmee market, you see a downward trend and a downward trajectory. And so it's kind of leveling off over the last few years, but it did take a bit of a dip right here, and it seems to be increasing a little bit. Okay. If you guys have a market you want to make me to take a look at, I'm happy to do so. Someone just pinged me about Galveston. So let's see. Let's see what this market is looking like. Okay, so we're like in this peninsula area. 57% occupancy rate. So we're trending, right? And you see, it's kind of headed on an upward trajectory. Okay, you see that? Let's take a look at the Cape Coral. And Christian, if you have anyone who wants me to take a peek at theirs, I'm happy to do so. Okay, so Cape Coral, similarly, we're seeing, okay, there we go. We're seeing these peaks and troughs. Okay, Azlina has Bucharest, Ohio. Let's see. Okay, it only has enough data for less than 10 listings, so I would not be able to evaluate it. If there's a city outside of here, Azlina, let me know, and I'm happy to have a look at that, and we can extrapolate some of that information. Okay, so I have Mobile, Alabama from Jessica. All right, so let's look at Mobile. Dang, Jessica, look at Mobile, y'all. Okay, so you see this, right? Okay, so definitely there is a, there's a trajectory, a whole trajectory, right? There is a whole trajectory of, listings that are increasing. So let's see. Let me know in the chat. I'm going to do a little quiz. Is this a small, medium, or large market? We have 564 active listings. Let's see who's an A student today. Is this a small, medium, or large market? And I'm looking. I want to see who's paying attention. Who's with me? Who is with me? Let's see. Small, medium, or large? Let me know. It's 564. Remember what I said small was? Awesome. Okay. Fago. It is a medium market. Okay. So we see that there's some growth happening here for sure. So I do love that the number of listings are increasing, but are my dollars increasing too? Hello, could I get a hello? I'm gonna need my dollars to increase as well. Okay, so I don't want to leave anyone out of the situation. So Cookie wants Myrtle Beach. Let's see. Myrtle Beach, South Carolina. We know Myrtle Beach has a whole lot of different little segments to it. There's North Myrtle, there's Myrtle Inlet, right? So Myrtle Beach is a situation. So let's see. And you guys can probably, yep. So Myrtle Beach, there is that upward trajectory, but there are the peaks and troughs that indicate the seasons. Okay, so Myrtle Beach has 9,368 listings. So that is a large market. Remember, everything over 1,000 is considered a large market. Okay. All right. And so let's see, Gulf Shores, Alabama. And so for those of you who have access to AirDNA, I want you to go ahead and feel free to log in if you're available, if you're in front of your computer, because some of the things that I'm going to be sharing, I want you to go step by baby step, because it's going to serve you well. So here's Gulf Shores, Alabama. So you see, I'm looking at this and I can't really tell, if I'm being honest with you, because it looks like overall, it looks like it's been steady since 2018. So this is May 2018. For those of you who can't see, let me zoom in a little bit, okay? May 2018, excuse me. So let's say March 20 or April 2018 to now, it kind of looks stable, okay? So guys, I know we're getting a lot more places to take a look at, but let me tell you what, let me do the quick analysis, because I do want you to see this activity. I think it's so very important. Okay. So here's what I do. I make sure, my friends, that I have my filters cleared out. So I have no filters here. because when I am evaluating, oftentimes I do leverage my bedroom count and things like that, just to kind of zoom in. But for this activity, I'm looking at the overall market. Okay. So Gulf Shores, the overall market, I selected this down arrow, and what it did was it allowed me to get this download. Okay. So I don't love this download platform. This is the Mac one. I usually use Excel, or I use Sheets, but nevertheless, this is sufficient for what it is that I'm trying to do. So what is it that I'm trying to do? Remember, I'm looking at the growth, if there's significant growth, and then I'm looking at the dollars, right? Is the growth equal to or in proportion to the amount of dollars that are being injected into the market? Okay. So again, typically what we had seen with, was it Mobile? With Mobile is what I'm used to, like that growth and then the number of dollars, but this is different, Gulf Shore. So I'm curious. So all I did, guys, was just selected this button right here, and I downloaded this. So the next thing that I want to do is say, okay, I know that the number of properties increased, but did my dollars increase as well? And I can find that in revenue. Okay. So the revenue is going to be important as well. And you see how it's like peaks and troughs and peaks and troughs. So I'm going to download this as well. And so once I selected that, now I have these two tabs. So I have my active listings, and I have my monthly average revenue as well. Okay. So for instance, the 1-bedrooms back in 2018 generated a total of 2,000 or 2,151. All of the 1-bedrooms generated 2,151 for that month of April. And down here, the 1-bedrooms generated for the month of March, 3,641. So that's pretty much what it tells you. And so what I did is I worked with a developer to create a little dashboard for me, because again, I'm a data nerd and data is king, right? And so I don't need 2028's number. I actually need, I would say 2021 to 2022. I want to compare those 2 years. Okay. So my monthly revenue, all I would do was go from January 1, 2021, and I copy that, and I ended on December of 2022. So I copy that there, and then I paste it in here. So revenue. Hang on. This is revenue by bedroom. Okay, so this is interesting because I was expecting to see the villas and all of that. Let's see. Okay. 1, 2, 3, 4, 5. So 1, 2, 3, 4. Okay, I'm just going to do, just for the sake of this activity, I'm going to do the 2 bedrooms and on, I think, but give me 1 second. I do want to see. Hang on. Oh, guys, my humble apologies. Here it is. The total market value. This is the one that I want. Okay, so I told y'all it was unscripted. So not the revenue by bedroom, but the total market revenue is what I'm looking for. Okay. And so I'm gonna do this instead. So once I selected that, here is what we have. Okay, so we have house, unique, B&B, and apartment, which is perfect. This is exactly what I was looking for. So again, I'm going to go January 21 all the way to December of 22. So I want to compare January to December, copy, and that's over the course of 2 years. So I'm going to copy that and I'm going to paste it in here. And you know what? I want to zoom in because I'm sure some of you are like, what? I can't even see it. I'll make sure you can see it. All right. So I'm going to paste it in here. Paste as values. I just want the numbers. So all of these numbers are in here. And once I pasted it in here, there were updates that were made. So, and I'm going to undo it so that you guys can see the changes. So look at it carefully, and I'm going to paste it again. I pasted as values. Okay, so you see the changes that were made. And the next one I'm looking at is the active rentals or the active listings. Okay. And I think I should name it active listings actually. And for those of you who are in the masterclass who signed up for the membership with short-term gyms AirDNA membership, let me know if you don't see this, the saturation calculator in your portal that comes with the membership. So I got that special made just for you all, because I do want to debunk the situation where I'm hearing everyone saying my market's saturated. Well, is it though? Okay. So again, I'm copying from here. You see where it says active listings. Hang on. Monthly active listings. So, and that's up there. January 1, 2021 to December 2022. And so we put a lot of work into creating this dashboard because I needed a quick way to identify, well, is there saturation or is there demand? Okay. Is there saturation or is there demand? And so once you enter in those sets of numbers, just by copying and pasting, you then would have your answer. So for Q1, meaning if I were to compare Q1 of 2021 to Q1 of 2022, there's an 8% saturation. And that is year over year. So just the quarter. If I'm looking at Q2 of 2021 to Q2 of 2022, we see a 2% of saturation, meaning we have more listings than we have dollars, the proportions. Q3 of 2021 to Q3 of 2022, we see a 3% saturation, which these numbers I'm not afraid of at all. I don't mind a little bit of saturation. It means that, you know, there's going to be great competition. But Q4 of 2021 and Q4 of 22, there's 25% of saturation. I don't love it. I don't love it. I would really have to do some digging to understand what's going on and why that is, okay? And so what we're seeing, so for instance, is in Q4, which is October, November, December, you see, we have probably this, you know, the same amount of listings, right? But the dollars are all the way, you know, down here. Not enough dollars. So let's look at the number of listings real quick. So you see October, November, December, that's your Q4. It comes down a little bit, right? October, November, December, it's coming down a little bit, but it's not tanked, you know? So that makes sense to me. That identifies that as a seasonality play. And if you're an individual who plans ahead, you know, and you're ahead of the curve, you're going to know that, you know what, this is coming, right? This is coming in December. So I need to act accordingly. Okay. So just preparation is the key. You want to make sure that you're, you know, you're leveraging the fact that you're going to have a slower season to make sure that you're still able to host. You're still able to host in the manner that you would like to. So if you want to host snowbirds, or if you want to host or if you want to stay in your place, during Q4, that's definitely an option. And here are the numbers in action, okay? So in Q1 of 2021, the Gulf Shores market made about $40 million as a whole. In 2022, they made 52 million as a whole, okay? That's how many dollars they made. They had 4,000 listings in Q1 of 2022, and they had about 5,000 listings in Q1 of 2022. So 21, 22, okay? So that is how you read into this. And if you're looking at Q4 of 2021, the market as a whole made 48 million in Q4 of 2021. And Q4 of 2022, they made 68 million in Q2 of 2022. And the difference in the number of listings is not that much, but then the difference in the dollars is not as significant either. So 50, 54, 52, 5,452 active listings in Q4 of 2021, and then 6,231 active listings. Okay. All right. So I hope that helps you to understand a little bit about the saturation play. And so the next step I would do really is, if I were to review the seasonality information, it should also support that like October, November, December. Okay, let me see. I'm looking for December. I don't see it yet. There it is. Okay. So blue means that we're in our low season, and red means that we're in our peak season, right? So look at October. October, you're doing great. You're kind of pinkish red, but all of a sudden, halfway mark, you're down. Okay, so you're down in October. Okay. And look at November, you're pretty much slow except for 3 days. So we got our Thanksgiving situation. December, except for Christmas, right? We've got that situation. January as well. Okay. So that really, it really supports what we were seeing a little bit earlier. Okay. And so hang on 1 second. Okay, so that's by two. Yeah, actually, yeah. I think this is a good spot to pause, to be honest, because this is one of the main questions that we were getting was around that of saturation. And so just wanted to make sure I showed you a specific demo, because we're not going to live off of Hopium. We're not going to do a whole lot of guesswork. I just want to make sure that you're fully aware of how to evaluate. Okay. All right. So Christian, let me see. I'm looking for the link. There it is. Okay. I'm looking for the link for questions there. I think we're good. I think we got it. I may have to open it on my desktop. Give me 1 second, my friends. Okay, there. Perfect. All right. So I'm going to pause and take some questions before I go into the pacing and an optimization side of the house. Okay, my friends. All right. So, okay, I've answered that question. All right. Let's see. Okay, I see. Okay. I already got this one. Okay, so Priya is asking, when you saw luxury properties, what is the price range you look for in the suburbs of Georgia? So Priya, I'm always looking for a great deal, but typically in the suburbs of Georgia, it would be anywhere from, I would say 500 to 750 is where my comfort zone is. Above 750, the numbers just do not pencil out. So I hope that helps. So that's for the Southeast. Of course, when you head over to the West Coast, those markets are vastly different. All right, so got that one. Next question was from Sujata. Sujata, I got you locked and loaded. All right, so I went ahead and responded to that one already about the agency. So ALE Solutions Online. Next question. So Karen says, 2023 seems like a completely different outlook than 2024 or 2022 rather. How much can we trust due to the volatility and regulations happening in so many markets? Will many people likely dump their properties this year and change the saturation? I believe many operators, Karen, will dump their properties this year. So much so that it is so important that you have the data at your fingertips so that you can pounce and be ready. So we're hoarding cash and we're looking for opportunities and we're making offers below asking price and we're grabbing opportunities because so many people are nervous and afraid. And a lot of people aren't willing to invest the time and effort that it takes to analyze the properties to make sure that they themselves are not upside down. And, not to, be the bearer of bad news, but yeah, people are facing low occupancies. People are facing, issues with markets that, have regulatory constraints. One of the main reasons why I like regulations, honestly, regulations let me know where I can color, because I'm, pharmacist by training. I like to color within the lines. And the way I'm able to color within the lines is if I know that these are the zones where I can operate, this is what's required of me to operate. You need me to hang a sign, you need me to send letters, yada, yada, yada. Hey, I'm here for it, However, when you invest in areas that do not have regulatory constraints or regulations, it's almost like the wild, wild west, and I know it's a pickle to be in, but the lack of regulations means that the likelihood of that changing any given day is just so high. It's so high. So that is very concerning, right? So that is why we're looking. As a matter of fact, we have landlords and hosts who are fatigued. They're like, I am not about this life. I need to do other things. This is just too much. I'm tired of short-term rentals. And so for those assets that make sense for us, we're able to either purchase them, pick them up, or leverage the co-host strategy for them, and that is a whole other business. Property management co-host businesses have a really significant valuation. Why do you think all these property management companies are coming into the market looking to purchase properties off of our hands, right? So this comes with understanding the numbers. If you understand, hey, these numbers make sense, I can generate a great amount of revenue with these numbers, it's going to be worthwhile to make sure that you're making those types of evaluations. Okay. So whether it's co-hosting, whether it's purchasing, which is my favorite, is owner, landlord owner strategy, but we also co-host, we also arbitrage. You just never know. You never know how the cookie crumbles. Again, knowing how to evaluate property, knowing how to identify markets where it's going to make sense is going to be really, really important. Okay, let's see who's next here. Okay, so Karen has another question. So she says, I used AirDNA when I was looking into a 7-bedroom home in Clayton, and the potential looked amazing. And now it's not performing this year as well as projected, or as well as last year. Is there hope? So let's have a look. Let's take a look at Clayton, Georgia. One of the things that I do know is a limitation is the bedroom count, right? And so let me see. Let's go to Rentalizer real quick. Rentalizer is a starting point. I don't recommend it for the end all be all, but it's definitely a starting point, right? Okay. So in Clayton, Georgia, we went 6-bedroom plus. I'm assuming maybe 4-bedroom. I'm making a lot of assumptions here, Karen, but feel free to let me know. I'll go with 16 guests because I believe that's the max you can leverage on Airbnb, 16 guests. Okay, so we're at a 51% occupancy rate. Okay, so this is what's expected for bookings for this year, 51%. So my question to you, Karen, is what is your occupancy rate that you have been encountering? So for 6+ bedrooms, the annual revenue that's expected, although again, this number is not the end all be all, but high level, the annual revenue is 80,000 and the occupancy rate is 51%. And so the next step would be, so I don't see 7-bedroom comps here, but yeah, so let me know your occupancy rate and let me know the revenue that you had been able to generate off of this property. I have 1, 2, 3 properties. No, I guess, yeah, based on these numbers. So the days available is very important. So say it's a part-time host that's only available, 100 days out of the year, right? So if it's available 100 days out of the year, we wouldn't use that as a comp. I like 270 days or higher as my comps. So according to this one here, this one was available 271 days and it has a revenue potential of 66K. This one was available 359 days. It has a revenue potential of 85K. This one's available 360, and its revenue potential is 59, and this one's 80. So anywhere from 59,000 to 85,000 is what we're seeing here on first glance, but there's more work you have to do to really validate that. So the next step is, of course, to identify, well, are those numbers true? Is that hypothesis true? So already this one here, is this the property that I just looked at first? No, it's not. Which one is this one? So this one right here. Okay, so this property here that says that the revenue potential is 61,000. It is not 61,000 because based on the number of reviews, I don't have enough data to support that this is going to be the most, the most accurate, right? So I do have some reviews, but not enough reviews on a monthly basis. So I would just remove this one from my formula as a comp, although it's it's available 271 days. That fits my criteria, but the review portion does not. Okay, so the next one that fits my criteria is this one here. So I have it's a spacious mountain cabin with sweeping views. Okay, the fact that it has those views, you see like the mountain peak, that's cool, right? All right, so let's see. Yeah, I do have quite a few reviews. So this one would indeed meet my requirement. So all this to say, If I have a home that is a 6-bedroom, 3.5 bath, where I can host 11 guests, and I have a view like this breathtaking mountain, I can feel confident that I would make $85,100 based on the fact that they're making that. Now, if there are opportunities for improvement, opportunities to say, theme some things out or add massively desired amenities, I have the potential to make more. But as it stands, being conservative, this is the potential revenue that I can make with this property that has those views, okay? All right, so the next one is this one right here. So this one is available 359 days. This one's available 360 days. It says it has mountains view, but this is a 6-bedroom that hosts 11. This is a 5-bedroom that hosts 14. So let's have a looky-loo. Okay, so super cute, but already you can see it's a lot more dated, right? The carpet game is real. But let's look at the reviews because we're not going all in, right? So the reviews, okay, so the reviews are inadequate. So I would not use this as a comp. So this is a no, this is a no, this is a no. So if I only have this one, that's a viable option for reviews. Oh, you know what? Let me look at Verbo. They are on Verbo too. So maybe the Verbo reviews will like, we can add it in. And once you add it in, it can perhaps cover the, okay. So Verbo seems to have some opportunity associated with it that kind of covers the gaps that I'm seeing in Airbnb. So yes, I would use this property as well. So this property does look a little bit more, just a little bit more dated than this one. This one has all of this, like this really interesting stair railway, which would be considered like, you know, a bit of a feature. It's got this amazing hardwood floor throughout. It seems, it definitely has a vibe to it. So you guys see that, right? So it definitely has a vibe to it. And this one, on the other hand, seems a bit more dated, you know, it just is. It doesn't have the cabiny feel from the outside. And we have carpet for days, right? So in terms of the disparity of the pricing between this one and that one here, I mean, that's a $30,000 difference. There is a one less bedroom here as well. But I would say that these two properties with the views, they did in fact generate this amount of revenue with the potential to make this amount of revenue. But if you were to update this one and add some type of, you know, sizzle feature to it and remove some of the carpet, you can, you know, bump it up. So it's almost like a $30,000, you know, bump. And, you know, maybe it's a $30,000 renovation. And on year 2, you would start to see some of that back. Okay. So these two numbers so far, I agree, are true. And then this one here. Okay, so this one does have a lot of florals on the wall, which I don't think needs to be highlighted. Okay, so not enough reviews quite yet. Okay, but there is a Verbo. Let's see if Verbo closes the gaps for us. Okay, the Verbo listing has been taken down. So it's hard to tell. It's hard to tell, but with the information that we have in our hands, we can safely say the properties in this market that have this mountain view can generate anywhere from 59 to 85,000 per year. So let me look at your question, Karen. Okay, so Karen says it's technically a 6 bedroom with a loft, so that would make it the 7. Let's see, 50% occupancy last year, Okay. Okay. I don't know where I should be, especially less than 60 days out, which is considered last minute for these. Okay. So let's have a look. Yes. So Karen, yes, I shoot for 6-figure. Like for me, this would be considered a high risk investment. I shoot for 100K. And the reason, and there's nothing really special about 100K. I was just looking to replace my income with just 1 or 2 properties. And I knew that if I could shoot for 100K on one and 100K on the other, I would be able to achieve that because I wanted to invest in just 2 properties. That's where I started out. That's why I shoot for 100K. Let's see. Okay, so let's see here. Okay, 12, got it. Okay, so Karen mentioned that she had to limit it to 12. All right. That will impact it, of course, for sure. But as far as pacing, so this is a great segue, my friends. This right here is, I feel, the secret sauce, the pacing. So as far as pacing, you want to get a little bit laser focused. So part of my SOP, when I was managing all my properties on my own, now I've got a virtual assistant that helps me out, and I'm so grateful for it. But early in the morning, around 4:30, before I would head out to the pharmacy to work, I would go in here and identify like the next chunk of time where, for instance, I wasn't getting booked, right? And so I would just really go all in on that time period just to streamline. And so, for instance, you see, if you go to, again, remember, price gives us prospective. We did research already. Research is retrospect. We're looking at what already happened. Price is looking at what's happening in the future. And so this is so important. And I really hope that, you guys can stick with me for a few more minutes as I go through this. So what is happening in the future from April the 18th, that's today, and then there's tomorrow, all the way till October the 15th. Okay. So some people are booked all the way out to October the 15th. Okay. So, but I don't want to focus out here unless, I'm fully booked in here, then I'm, future pacing myself for the most part. So let's just focus on the rest of the month of April. Can we do that for a second? Can we just focus on April for a second? All right. So let's just focus on the rest of April. So I'm even going to hop to May. So this is May the 1st. Okay. So each of these dots here indicate the median booking rate. Okay. The median booking rate. And so this is for all properties. The median booking rate is indicated here. The yellow indicates the booked listings. Okay. So come back to me if you're multitasking. I'm going to show you what I actually leverage in order to get more granular. So I don't care, I don't care about the 1 bedroom, 2, 3, or 4. I'm at the 6+ bedroom, right? Because we're talking to Karen right now. And I'm at 1 to 12. Okay. I'm going to host 1 to 12 individuals. Okay. All right. So let's have a look. So according to what we're looking at here, we have 0% occupancy right now on Tuesday for 6+ bedrooms. We have 0% occupancy on Wednesday for 6+ bedrooms. And on Thursday, we have 67% occupancy on 6+ bedrooms. Okay. So the anomaly here is that the market, hang on. Yeah. The market has only a few listings available. Okay. So according to this dot here, there are 3 total listings. Okay, you see that? So because there are so few, it's really hard to identify, like, is this a trend? Is there a seasonal trend to it? And since that's the case, I'm going to actually expand it. I'm going to go, let's see if I go 5 and 6 bedrooms, if I can get a few more numbers in the mix. Okay, let me go even. I'm going to go 4+ bedrooms to see if I can get a few more numbers in the mix. And so I know that Karen mentioned that she was limited to 12, but I'm going to expand it to 16 because I do want to see the other numbers. I really do, Okay, so we're at 4 to 6 bedrooms that accommodates up to 16. And if we look over here, there's a 16% of properties are booked at $285 per night. That's where they're booked. Okay, that's the median. So 11 of these, 67? 11 out of 67 are booked at a median of $285 per night. So let me close that gap a little bit. Let me go back to my 5 because I want to get that number as close as possible. Okay. So when I close the gap, only 3 are booked and the median is $325 per night. Those that aren't booked, there are 22 that are not booked, and the median of the ones that are not booked are at $497 per night. So this is what I would look at. I would look for the next 7 days, how many are booked, how many are not booked. Those that got booked, what was the rate with which they were booked? Those that are still hanging, well, what is the rate where they're still hanging? And so that is the assessment that I would make. And the judgment call would be around, again, knowing what the behavior of the market is. So what is the booking lead time? It's 35 days is the booking lead time. The average length of stay is 3 days. So since there's a 35-day booking lead time, then that means for the next 35 days, I need to really scrutinize and just kind of future pace myself. So from April the 19th all the way to May, like May the 24th or 25th, right, guys? We want to look at our property. Let's see. This is May the 17th. We want a few more. Why is my mouse acting like that? Okay, May the 25th. So all in here, I want to scrutinize exactly who's booked, exactly where they're booked at. And okay, of course, this every time you switch the page, it's going to go back. So be sure that you're, I'm just going to leave accommodates off. Be sure that you're redoing your filters, okay? And I'm going to go to May, like that's the May the 19th, May the 30th, a little bit more. I think that should do it. May 26th, that works. Okay, so this I'm looking to optimize this 35-day, booking window, most likely, because I just looked on the overview and it says 35 days, but there is one more place that I do want you to pay attention to, because this spot is going to be really specific on a month to month. Remember, these numbers are mostly average, right? So I want to know the specifics. So I think it's down here, maybe in seasonality. So I want to know for April, what is the exact booking lead time? So the average is really 33 days. And for May, what is the exact booking lead time? May is 41 days. Okay. So in May, I'm going to be looking 41, I want to make sure that anyone who's looking to book in May, 41 days out, I'm making sure that my listing is optimized for those guests. Now, you'll see, like, let me show you, hang on. So June and July are, it's going to get really hot, and in the bookings around those time periods. So June, you see it's 41 days out. That indicates that there's interest. People are booking early to show up around June and July to that market. Okay, so let's go back to our pacing. We're going to go back to our 5 to 6 bedroom. And then we're going to squeeze this in. And I hope this is helpful, guys. I'm not even looking at my chat, but this is really what we do when we're evaluating data. It's so important, right? Okay, so again, it helps with your decision making, right? It helps with your decision making. And so these numbers here, the median. So you have 3 properties here that booked at a median of $1,000, which is interesting. Only 11% are booked. And then you have those that aren't booked. The average is 480, then 505. So you have this significant mismatch up here in median booked rate, but the number of booked properties are all the way down here. Okay. So you can see in here, if you're not booked, what you would want to do is just get an idea of the percentage of properties that are booked and at which rate they are booked at. Okay, so that is definitely my starting point. I hope that was helpful. I know that we were doing this for Karen, but I really hope that a lot of you were able to pull up AirDNA to kind of follow along and do it yourself, because it is a worthwhile activity. We have AirDNA nationwide. If you're not receiving my emails, what are you doing? You must be missing out, because we have been blasting emails back to back to back, because we indeed have a program. We have our AirDNA Short-Term Gems membership, which is absolutely amazing, where we will be going over a lot of this pacing information with you and coming up with strategy on your next best move, and it really entails sometimes, optimization of the actual listing, right? Sometimes it's a whole different marketing strategy. How do you turn things around when your property is not performing? The first step is the information, but the next step is understanding your specific market. What I would do next, and I know I'm way past time, but the next thing is grabbing all of the properties in that market, adding it to the AirDNA comparison, and just looking to see, what, this property is optimized this way, this property is optimized that way. For properties that, you can't just move a property and make it oceanfront if it wasn't oceanfront to start with, right? And so it's really, really important to know what is the next best step to optimization, okay? So guys, I hope you all take us up on this offer to come and join us inside of the AirDNA membership, which is super, super awesome. We will be having trainings nearly every month. I have one coming up in May, right around the corner. Myself and the AirDNA data analysts are going to be joining us as well. This will give you access to the AirDNA platform nationwide, all 50 states, all cities, for a low price. If you calculate it out, it's $158 per month. So as low as $158 per month or $183 per month. It depends on, the payment plan that you select. What that comes with is not only this amazing AirDNA membership with short-term gems, but also I have an AirDNA boot camp where I go through every single one of those tabs that I just mentioned, which is absolutely, which is going to be really important, because having AirDNA is one thing, but if you don't know how to use AirDNA, it's a whole different story. And there's so many members in my community who said, oh my goodness, I've never seen AirDNA used in this way, because here's the deal. The information on the front end is not always accurate. It's important to scrape that information out and remove it and filter it down to just the information that is going to be the most accurate, so that you can make decisions, right? Now, if you're making decisions off of inaccurate information, you're going to find yourself in a pickle a year from now. Okay, so part of why we're going to have this training and support with AirDNA is because I not only want you to have access to the platform, but I also want you to have access to the information. And so I have a step-by-step AirDNA bootcamp that's available right now. You can just get it with the membership. Remember, the membership is $158 or so per month if you pay for the year. That's a year subscription, but there are a few other options as well. If you go to shorttermgyms.com, I'm going to share my screen. I think it's shorttermgyms.com/AirDNA. If you go there, you're going to see your options. And so tier 1 is going to be 2-year commitment. AirDNA on its own for 1 month nationwide is what I used to pay is $900 a month. $900 month to month for just 1 month, okay, to get nationwide. Now you get nationwide for $1,896 flat for 2 years. Come back to me if you're multitasking. For $1,896 flat for 2 years. No monthly payments, that's flat. But if you need a payment plan, we have a quarterly payment plan for $549, or we have a monthly payment plan for $207 per month, okay? And so this is the deal of the year, our short-term gems and AirDNA membership. The reason I connected with AirDNA to get this out to my community is because I know the difference that it has made for me. Investing in a silo is not fun, but being in a community where you're able to have accountability, you know, even inside of our community, we have our market analysis. We have our market analysis pod. You know, I just have seen the difference it's made for my community. And I know that as we continue on with, you know, the change in our, the changes of time, you know, it's going to be more and more challenging, you know, to invest. And so this is not something that I want you all doing solo. And some of us who are facing regulatory restraints, we're going to have to step outside of the box and pick up deals outside of our local area. But now is still the time to pick up deals, especially if you want to take advantage of amplifying your cash flow with your advanced tax strategy, right? So we're leveraging bonus depreciation, we're leveraging 1031 exchanges, we're leveraging income shifting strategies. And honestly, we all know it's not necessarily how much you make, it's how much you get to keep, right? So those advanced tax strategies, some of them will no longer be available in the next couple of years. So for us, now is still the time. Now is still the time to invest, especially with these loopholes being made available to us. But again, profitability is not by accident. It's intentional. And again, my goal was to show you all step by step exactly what I do to optimize my property, to make course corrections. And these are the same strategies and course corrections we used when we started investing back in 2018, 2019-ish. And we had seen a vast amount of success. We had a portfolio of 10 properties that were generating, you know, multiple 6 figures per month. And to me, that was the aha moment. Again, it doesn't come with, you know, set it and forget it, right? Set it and forget is a whole hoax, right? It doesn't come with set it and forget it. It comes with just really being intentional and really being strategic and having a game plan, having a checklist. So for those of you who are looking to have a plan, to have a checklist, definitely this AirDNA short-term gyms membership is the place for you to have that opportunity to deep dive and to know, okay, before I take on this property, a little bit earlier, I have a member who is taking down her first arbitrage unit. We spent an hour in AirDNA just going through similar activity that I just shared with you. Inside of our high-level mastermind, I just shared it with you. I just spilled the tea because I want our community to be informed. I want our community to stay at the forefront, you know, and that'll help me achieve my goal of helping, you know, over 1,000 families this year reach financial freedom through real estate investing. And that is my goal. Okay. So let's see. Okay. So I'm seeing a few more questions, Christian. My apologies. Christian's like adding these questions and I'm just seeing them now. Yes. So I use all three strategies. FIGO feed, I use ownership, I use arbitrage, and I use co-hosting, but it just really depends, right? It really depends on the asset. I like the properties to be within my brand and within my area of expertise because I'm able to quickly optimize and my team is able to quickly optimize as well. Okay, so FIGO feed asked how often should you evaluate? As often as needed. Okay, so again, my goal is to be the top 5% of my market. And so if I notice that I am not getting the bookings at the rates that I want, I evaluate and I course correct as well. Okay. All right. So guys, get your fingers on the pulse of this information. Get your fingers on the pulse of this information. It is just oh so important. As you all know, AI is out there. Data is king. That is the only way we're going to thrive and not just survive, you know, this next cycle in our investing is through leveraging data. And the data is at your fingertips. Again, you know, 207 per year if you so desire. But guys, at $18.96, one time for 2 years, this is just such a great steal of a deal. And I'll show you some of the bonuses that it comes with, which I'm super pumped about. The first bonus is actually my AirDNA bootcamp, guys. Again, my AirDNA bootcamp. And this is where I go step by step, by baby step, and show you exactly how to go through. I show you exactly how to go through all of the tabs within AirDNA so that you can do it on your own. And guess what? If you determine that this market that you're looking to invest in is not actually going to be a good fit for you, if there's a regulatory constraint that is stopping you from investing, just move on to the next market. You will have access to every single one of the markets. So bonus number one is the AirDNA bootcamp. Bonus number two is all of these trainings. So you've already missed, like we can do a strike through here. You've already missed this one particular training, right? Because the date has come and gone, but you still have May 10th, June 7th, July the 5th, and we have some AirDNA trainings that are coming down the pike. It comes with the dashboard that I also developed for you all. And additionally, it comes with the special AirDNA trainings. And all of the trainings that I just mentioned, except for the boot camp, you have access to it right this second, right now. But these other trainings are going to be live. And so you would get a calendar invite to get access to it live. Guys, this is a limited time only, okay? I just really do not want you to miss out, because once it is gone, my friends, it will be gone. So tap in. If you have any questions about the payment plans that are available, let me know. All of this is valued, guys. For everything, the total value is $19,994. The reason we're able to get it at such a deep discount is because we told Erdine we wanted to purchase a bulk number of licenses and pair it with our own special program. So they formed an exclusive partnership with us in order to get your hands on this amazing deal. So let me ask you now, I still see that there are about 30 people with me. And I'm going to have to kind of switch gears because it's about to be Taco Tuesday. And I think they're making it the way that I like it, with rice. Just saying, I'm from Haiti, y'all, so I got to have my rice. So let me know, guys. Let me know in the chat if you have access. If you've already, oh, I see some of our members who have already signed up. If you haven't signed up, let me know in the chat what questions you have, or let me know in the chat while you're on the fence. If you haven't signed up, let me know in the chat. Tell me I'm on the fence about this, because I'm on the fence because. Okay, Jessica's asking about the Alabama market. Oh, I see you, Dr. Sarah. Oh my gosh. Okay, Dr. Sarah is asking about her market. Dr. Sarah, when can you jump on a call? I know you're always working, my dear, but let's jump on a call to take a look at your specific properties, okay? Okay. Tanisha in here says, I'm going on 3 months almost, 9,000 a month with another extension. Congratulate. So Tanisha's implementing my midterm rental strategy. Good for you. 9,000 a month, y'all. Like that is something, okay? That is not something you just want to ignore. That is absolutely amazing. Oh, David says he saw me with Tax Deed Wolf. Yes, Joseph. Oh, David, it's so good to meet you. So we did meet, my friend. Thank you. Thank you for your unwavering support. Okay, Figo Page, let me know, guys. Let me know what is stopping you from moving forward, because I'm looking forward to walking you to the next level and holding your hands through this process, my friends. And Gozi, I see you. Okay, awesome. Let me know, why are you on the fence before you jump off? So Figo Page says, can't wait to be able to get this. Yes, get it. We have the monthly membership, if that's a good fit for you, at $207 per month. And no offense, guys, if you can't afford to analyze data and to invest in these trainings and this data, you can't afford a property. I mean, like, throw me under the bus, but I said what I said. If you can't afford to invest in this, you cannot afford a property. So hold off on investing, because once you get that property, I kid you not, there are so many costs associated with it. So yeah, again, I said what I said, not to be ugly, but that is the truth. Oh my gosh, the costs associated with investing, it's already, going to be higher than expected. And it may even be, you may have surprises that occur. You're going to incur expenses. And so definitely invest in data, invest in yourself to make sure that you have the right information. Okay. So let me know, you're on the fence because Christian, let me know if there's any additional. Okay, so Jonathan, what extras are you talking about? The extras are included, my friend. So Jonathan's asking a good question. Would would love to join at the monthly rate, but which the extras were included. So let me see. Oh, the tier 1 only bonus. Jonathan, email us. The extras are included. Yeah, email us. I see where you're seeing that on here, but they are. We got you covered. We got you covered. But Jonathan, have you tried to sign up for AirDNA on your own? Let me know in the chat, because it's such a good rate. Trust me. This is the best rate ever. This is the best rate ever. And I know, and I hear that from a lot of people, you know, and so the extras are absolutely amazing. Being able to attend these trainings. We're going to be attending trainings with the data scientists behind AirDNA. Like, we're not pulling any punches, my friend. Okay. All right. So guys, I hope this gave you a little bit of inspiration. My goal really was just to show you all what's possible and to share with you how I myself am doing, you know, am doing my investing, how I myself am optimizing. So hopefully you're inspired. Okay, let's see. Okay, so FigoPage has a question. Is this for a 1-year membership? FigoPage, this is for a 2-year membership, FigoPage. But if you need a 1-year membership, I think the team can work something out. Just email hello@shorttermgems.com, hello@shorttermgems.com. It's going to be at a little bit of a different rate, but I think we can definitely work something out. Do not go and invest in property without investing in yourself first, to make sure that you're able, you know, to confidently identify the properties that are going to make sense to you, the properties that are tried and true, the properties that are crushing it. Because I've seen both sides of it. I've seen those with properties that are struggling and those with properties that are still crushing it. And so my hope for you is that you invest in assets and properties that are absolutely crushing it. And that is really why I brought this training to you tonight. So it was serendipitous. Again, I hope you are all inspired, and thank you for joining me. Goodbye for now.